Hey crypto friends, for those of you who are new to my channel, my name is Garrett and welcome to Altcoin Radar. Today I am going to talk about the difference between trading the crypto futures market in comparison to trading the traditional crypto spot market, all right? And for those of you who are new to the channel, if you are interested in trying out the same exchange that I use on a regular basis, feel free to go ahead and try the MEXC crypto exchange. You can find a link to it in the description below this video. I personally love this exchange because one, I've been using it for the last 3 years with no issues whatsoever. And on top of that, they also have futures trading and they have over 1,500 different altcoins for me to trade at any given time. And I'm a huge altcoin fan, so hey, what's not to love about about more altcoins, right? All right, guys, so crypto traders, they typically use a lot of different methods to trade cryptocurrencies, okay? So, and here's the thing, each of these methods, they definitely work differently, all right? And not all of them may be suitable for everyone, all right? While methods such as spot trading are pretty popular, as nearly pretty much every crypto investor uses them, others, such as futures trading, for instance, are not very common, all right? So today I'm going to actually cover futures trading and how it actually works, and I'm also going to reveal if it's, suitable, if it's a suitable trading style, for you specifically, all right? So I'm going to start this off with what actually is crypto futures, okay? So if you're not familiar with crypto futures, it's basically a type of it's kind of hard to explain. It's basically a type of trading that pretty much mimics it mimics futures trading in the traditional markets pretty much. So it's pretty much just like, futures trading in regular markets, but in the crypto market instead. It pretty much involves using futures contracts, which are basically just legal agreements pretty much. They're basically legal agreements to buy and sell an asset in the future at a predetermined price, okay? And in crypto, it means pretty much basically agreeing to buy a particular cryptocurrency at a specific price, at a time in the future, regardless of the price when the time actually comes, okay? Overall here, the agreed time may be as short as 24 hours, as long as, several, up to, over several years. I mean, honestly, you can hold on to these crypto futures contracts for, pretty much for as long as you want, pretty much, depending on overall how long you want to, wait to close on your position. Now, if I'm being honest here, this is often referred to as gambling. To be brutally honest with you, crypto futures market, it's pretty much just gambling. I'm not even gonna lie, okay? It's just straight up. That's pretty much what it is. And that's how it is in the traditional finance market as well, with the futures market also. Simply because the parties involved in these transactions, they usually base their trades on speculation of how the asset price will perform in the future, which is why it's called futures trading, okay? So let me just go ahead and show you an example of how it actually looks in the actual exchange itself. Actually, no, what I'm going to actually show you real quick is I'm actually going to show you the different crypto exchanges that you can actually trade crypto futures on. So for those of you who do know me already, you've seen this comparison sheet many times in the past. So basically, if you are based in the United States, the only exchanges that you're going to be able to trade futures on is going to be MEXC, which is the one that I talked about earlier. If you want to give it a try it out with the link in the video description down below. Other than that, you guys, you can also go ahead and you can try it on KuCoin as well. KuCoin also offers futures trading as well. So if you're from the United States, these are pretty much the only two exchanges that you can do futures trading on. Okay, Kraken, it is offered to people in the United States, but not their futures stuff. People from the United States can't trade futures on there. Okay, anywhere else in the United States or anywhere else around the globe, yes, you can trade futures on Kraken. Binance also offers futures trading. Gate.io offers it, Bitfinex offers it, Huobi Global, and Bybit also offers it. But none of these can be used by people in the United States, okay? They just don't allow access to people in the United States, pretty much unless you're using a VPN or something like that. But otherwise, regardless, you can use MEXC or KuCoin if you're in the States, okay? If you're not in the States, you can use pretty much any of them, all right? So with that said, let's move on to the next section. So how does crypto futures trading actually work, right? All right, so here's the thing, okay? This is going to be super technical in the beginning here, but I'm also going to provide you with a very super simple description after that as well. So The technical version first here is futures traders, they usually just speculate on how the price of an altcoin is likely to perform in the future, okay? Their conclusion may be based on fundamental analysis, or using some metrics of technical analysis, sometimes both, realistically. But upon which, they base their prediction that the altcoin will perform in a certain way on a particular day, okay? So here's a basic example if you're a little confused, okay? Picture a trader opening a short position, meaning betting on the price going down, in the crypto futures market on a contract to sell Bitcoin at a particular price on November 25th of 2022, okay? Another trader, on the other hand of the spectrum, who intends to take a trade, will open a long position of the contract, of a contract as well. Now, let's assume the agreed upon price is $25,000 per Bitcoin, okay? And the current price is $20,000, all right? The seller who placed a short position will be selling at a profit if the price of Bitcoin stays under 25,000, okay? Because they bet on the price going down, okay? So as it's going down, if it stays below 25,000, they are profiting from their position, okay? And the person who took out the long contract, those people are losing, okay, because the price isn't going above 25,000, all right? Now, on the other hand, if the price reaches, say, like $40,000 or something instead, the day after, on like November 26th or something like that, the person who placed the short position will be at a huge, huge loss. And the buyer who ended up taking out the long position will be at a very healthy profit. So as you can see here, you're not actually buying coins or anything like that. You're buying contracts, okay? And you're buying contracts based on what you think the overall future price of the asset is going to be, all right? Now, here is where things get super, super interesting with the crypto futures market, okay? To increase a trader's potential overall gains, futures traders can also trade with leverage, all right? Which basically means borrowing funds from the exchanges that they trade on, to increase the size of their overall trades, which is basically called leverage, okay? And it's usually in multiples of the original trade size as well. So here's a good example, a good simple example for you guys, all right? Most exchanges allow futures traders to leverage their positions anywhere from like 2x all the way up to 200x on some places. So you can clearly see how much profit potential there actually realistically could be in the crypto futures market, okay? That's if you're on the winning side of that's if you're on the winning side of the trade, that is, okay? So if you open a position, here's a good example. If you open a position with like $100 and you're using 10x leverage, your position really is going to be a $1,000 position instead of a $100 position, because you're basically multiplying it by 10 there, okay? And if you're on the winning side of the trade, you could potentially make 10x profits, all right? Or 10x losses if you're not on the right side of that trade and you end up losing that trade instead, okay? So that's why I say it is extremely risky. The futures market is extremely risky, okay? So as you can see, although you can make some pretty darn serious profits in the futures market, it is extremely possible to also lose a ton of money if you're on the losing side as well, all right? Like I was just explaining, all right? So the next section is how does crypto futures differ from, the crypto spot market, okay? So here's how it is, all right? Futures trading is significantly different from other types of trading. While the spot market, or while the spot trading or spot trading, whatever, or peer-to-peer crypto trading involves trading one asset for another, like your typical USDT, you're buying Bitcoin with USDT, or you're buying, you're buying Solana with USDT, or you're buying a Cardano with USDT. You're basically trading crypto for crypto there, okay, in the spot market, all right? Futures trading involves just a single asset, okay? And it's also different because the trader is not trading the crypto market directly. Instead, it's solely between a seller and a buyer, okay? Another key difference between futures trading and the spot market is that the trade does not actually happen, instantly or based on the current price of the asset. Instead, it's usually based on a speculated price in the future instead, all right? Now, if all of this sounds too technical for you or is confusing for you, a simpler explanation would be that the bigger The biggest difference between the futures market and spot market is that in the spot market you're pretty much trading one cryptocurrency for another, and you only profit when the price goes up, okay? And it's pretty much as simple as that, right? Now, in contrast, in the futures market, you can profit from the market going either up or down, okay, simply by placing, long orders. If you think you place a long order if you think the price is going to go up, or you place a short order if you think the price is going to eventually go down, okay? So you can profit from both here, all right? So now you might be asking yourself, which crypto market should you be trading, okay? Now this is the big question for everybody, all right? So here's the thing, all right? The answer to this is honestly going to it's solely going to depend on what literally your overall goals are in the crypto market and how much risk you're willing to take on, all right? For example, if you're a newbie trader, it's very, very highly likely that you're not going to want to take on a lot of risk. Therefore, trading the traditional spot market without leverage would be best for you, honestly. However, if you're more of an advanced trader who does your own technical analysis and stuff like that and is comfortable with taking on more risk, then the crypto futures market, hey, if you've got money to spare, and you want to try out the crypto futures market, then honestly, the crypto futures market with added leverage might be a good viable option for you on the side, especially if you're looking to maximize your overall profit potential. Now, whether you're a beginner or a more advanced trader, if you have any questions, if you guys have any questions whatsoever about anything that I have talked about in this video, I know I talk quite kind of fast and whatnot, but hey, it's just who I am. If you got any questions whatsoever, whatever, feel free to ask those questions in the comment section down below this video. I love helping people. It's the whole reason why I started this channel, because when I started in the crypto market, there was nobody to ask questions, and I wanted to be that person when I started to learn. So overall here, if you got questions about any of this stuff, you guys, feel free to ask, all right? I've been trading this market for 5 years now, and I feel like I'm pretty experienced in this stuff. So if you got questions, feel free to ask. Do not be shy, you guys. But other than that, that is going to pretty much do it for this video. So I will go ahead and wrap this one up. But again, guys, hey, before you guys leave, go ahead and make sure to subscribe to this channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you guys in the comment section down below of my future videos.